Thank you for joining us. What do you make of the market setup right now?
Good morning. Clearly with the US fiscal deficits turning out to be higher, it's now almost like, there will be some form of tariff impact on all the other countries, India included. Against that backdrop, we have an RBI surplus, which is going to be released sometime in the next few weeks. That can help India to do defense spending, capex spending. So that will support earnings, India corporate earnings. So I think that is the next support to watch for, and of course the RBI rate cut.
So how important is the spike in bond yields, and what kind of impact do you think that could have?
The impact of that is clearly, a bit unnerving at one point. And so the only thing that will help in the whole, as far as India is concerned, is we should see evidence of an earnings acceleration, because so far we've seen only earnings downgrade. Only then it will justify the valuations going forward.
Right. Chakri, let's analyze some numbers. And InterGlobe Aviation, it's of course a strong forecast for FY26. The management believes that all those geopolitical turbulences could very well be behind them. What is it that you anticipate in terms of where the stock could actually move from here? And do you sense further upside?
InterGlobe clearly in the short to medium term is well positioned. It has a few things going in its favor, which is oil is down, and that's the biggest component of its raw material costs, fuel costs. And outside of that, traffic growth continues to remain strong. And now in the traffic in the peak season that we're going into, which they don't have presence, that is the international segment, they're launching a new segment that may add some incremental bit, but not really. But just the domestic factor setup in itself is the outlook for InterGlobe is good.
Okay. And then, of course, there was the howler that was IndusInd Bank. Chakri, I mean, in any case, I'm sure everyone must have already exited IndusInd Bank. But what is it that you're making of the commentary? Because it's not just about core profitability or that one-time adjustment of Forex, but there are many, one-offs which I guess have led to this massive loss that they've incurred.
You're absolutely right. In this environment, when a new CEO is going to come, it's going to impact a lot of changes, operational uncertainty within the bank, on top of their existing problems of asset quality, provisioning, accounting issues. So it's best avoided and not touched for quite some time until things settle down.
Looking at one unusual stock, and one unusual stock right now I think is TTML. Rare, but yeah, just sort up yesterday, 18.5%. JK Tire Industries, big spike on strong volumes. Sudhamurthy, any thoughts on TTML? Suddenly it's popping up.
Nikunj, yesterday's price action has definitely been with good volumes also. And if you purely go based on chart, keeping aside the fundamental, yes, there is a breakout above levels of 65. Now, any dip from current market price to levels closer to 65 will be a good buying opportunity. And yes, levels of around 90 rupees is possible on TTML, but yes, it will take time. So I will be buying on dips to 65, keeping a stop loss of 63, look at targets of 90. However, JK Tire is much better in terms of chart pattern. And yes, fundamentally also that's a better stock to own. And volume action yesterday in JK Tire has also been very supportive. So for me, JK Tire will be a good buy. Compared to TTML, I will go with JK Tire. And yes, at current market price, and on dips to 375, 380 zone, you can definitely look into buying JK Tire and look at targets of around 450 to come on JK Tire. With a stop loss of 370, I will accumulate JK Tire for a target of 450.
Okay, that's that on some of those buzzing stocks. But the Aditya Birla Fashion and Retail is going to be demerging its lifestyle business in a 1:1 ratio. What's the rationale behind this demerger? What's going to be the road forward for the two companies? Stehi joins in with that.
Well, yes, so ABFRL or Aditya Birla Fashion Retail Limited is going to be in focus today on the back of its demerger. ABFRL will be demerging into two listed entities. One is ABFRL and the second one, the demerged entity, is going to be called Aditya Birla Lifestyle Brands Limited or ABLBL. The demerger ratio for the same is 1:1, which means every existing shareholder of ABFRL will get one share of ABLBL for every one that they hold already in the company in ABFRL on the record date, which is today. So that's important to note. The rationale behind this, the management has said that this will allow sharper focus on individual business strategies, and the demerger will help unlock existing shareholder value by discovering individual the price discovery of individual entities as well. The road ahead for ABLBL, remember when the company had their analyst meet about a month ago, Nuvama had come out with a report, and this is what the structure going ahead is going to look like. The demerged ABLBL will house Madura Fashion, Louis Philippe, American Eagle and Reebok. The management aims to double the current top line by FY30, growing at 11% CAGR. They also aim to make this demerged entity a dividend distributing company. And upon this demerger, ABLBL will have a debt of 7 billion rupees, that's approximately 700 crore, that the company aims to repay over the next 2 to 3 years. What's going to happen for the existing company? The road ahead for ABFRL, following the demerger, ABFRL will house pantaloons, ethnics, luxury retail and the digital first brand TMRW. They will also be housing designer-led brands like Shantanu and Nikhil, Sabyasachi, House of Masaba and Tarun Tahiliani. And going ahead, ABFRL will have a debt-free balance sheet and net cash of anywhere between 1200 and 1300 crore post the demerger. So that's what the structure is going to look like going ahead. But well, yes, the record date for this demerger and spin-off is today.
Chakri, what's your view on IndusInd Bank? I mean, it just, everybody knows the bad news, right? We know that there is a derivative loss. We know that there is a problem in MFI, and we know that there is no CEO. I mean, are markets pricing all the bad news?
Nikunj, I don't think so. Simply because, while the market might be pricing in news, it's what I think is still uncertain is about how will whoever is the new CEO, interim, how the operations are going to be run, how is it going to be cleaned up. All this will take away the focus of the company from its core lending and borrowing business, and instead focus on fixing the house. So, growth and operations as a casualty against that environment, valuations are difficult to ascertain.
Okay. So what are your holdings in financials?
In financials, clearly, still it is now one is the PSU banks, other than, HDFC Bank has made a comeback. So we hold HDFC Bank, ICICI Bank. But other than that, now in the case of the PSU banks, because again, it seems to be government will come to the rescue in terms of capex spending. Now, once the RBI dividend is paid, again, we'll see a push in both, likely to see a push in both infra and capex and defense spending. So again, the primary beneficiaries would be the SBIs, Canara banks and Union banks.
Right. So I'll come in on the charts of some of these. Canara Bank, SBI, anything within the PSBs that's looking good for an upside?
Canara Bank looks all right to me. It is still forming high tops, high bottom. I won't go with SBI. PNB Bank also looks all right to me. But Canara Bank, I think, looks the best. High top, high bottom formation. The momentum indicators are still on the buy side. I think the positive momentum should continue. It has been trading above some very crucial averages on the weekly chart, so that's a very good sign. So 113 would be my target for a Canara Bank, and the stop loss should be very strict at this point of time. Would be 104. So stop loss is a little deeper, but 104 would be the stop loss, and 113 would be my target.
Chakri was just looking at the charts of BEL, and the stock is pretty much around its 52-week highs. We've seen a renewed vigor within the entire defense pack as soon as the geopolitical tensions with the neighbor actually sprung up. Wanted you to tell me that other than BEL, where is it that you valuation comfort within purely the defense pack?
Within the defense pack, well, Bharat Electronics clearly is well positioned, as you say. Hindustan Aeronautics, Mazagon Dock are also looking good. These are all one-off companies in terms of, not too many people can make submarines, not too many people can make aircrafts. And outside of that, the somehow related thing would be railways, for the simple fact that now with the increased scrutiny and border controls, it's likely to see more railway penetration across all the more sensitive areas, and therefore companies like Titaga Wagons, Jupiter Wagons, all these companies are also likely to see, given that they've corrected quite significantly.
Okay, that's the take coming in on the defense and the railway pack. But ONGC has posted a mixed set of Q4 numbers where the revenue, EBITDA, and margins have come in above estimates, while profits have managed to miss the mark. Varun is here to break down the numbers for us.
Well, it has been a mixed quarter for ONGC. If you look at the revenues, they have gone up by around 3.75%. We were expecting the revenues to be flat. The EBITDA, there has been a decline of around 0.25%, but we were expecting the EBITDA to decline more than 4% and the EBITDA margin to come at around 53.9%. But the EBITDA margin has come at around 54.3%, although it has reduced from 56.5%. Now, why has been there a outperformance in EBITDA when compared to our estimates? If you look at the overall crude oil production and the gas production, they have gone down by around 1 to 1.7%. In fact, the crude oil production on a quarter-on-quarter basis is up by 1%. We were expecting the crude and gas oil production to actually decline by 2 to 5%, and the overall realizations, because of the reduction in the overall crude oil prices, we were expecting the realizations to actually dip on a quarter-on-quarter basis. But if you look at the crude realizations on the nominated basis in dollar terms and also in rupee terms, they have gone up by around 1.6 to 4.15%, and that's the reason you are seeing the EBITDA and EBITDA margins have been better than our estimates. But if you look at the profit has actually gone down by around 21.7%, and they have come at around 6,449 crores when compared to 8,810 crores that we were expecting. If you look at the overall cost structure of the company, that has gone up, especially the survey cost and also the exploration cost. If you look at that, that has gone up from 1,400 crores to more than 4,000 crores, and that's the reason you see the overall profitability has reduced from 8,240 crores to 6,448 crores. So if you look at the overall results, we were expecting the results to be more subdued. They are not that subdued, but yes, there are no fireworks as well.
Somal, where do you think IT stocks are headed? I mean, they've not participated in this uptick at all.
Yes, IT, I was just expecting a bounce. Overall, if you see Infi has been very sideways, and I'm not looking for anything in the medium term outlook. Yes, in the very short term, there could be the bounce. The bounce could continue till 200 daily exponential moving average, which is 1696 levels, and that's it for Infosys. I'm just looking this as a bounce, and overall, if you see, the medium term outlook still remains negative, because on the weekly charts, on the monthly charts, we have low top, low bottom formations. The higher degree time frame momentum indicators are in the sell side. So overall, if I see IT pack for the next couple of years, I would see this pack as very range bound, or probably I'll be looking for the previous swing lows to be retested. For Infosys, I would be looking at 1300 levels again to be retested.
Okay, that's the take coming in on some of those technology plays. Just looking at the market texture yesterday, while of course IndusInd Bank fell ahead of its numbers already, there was weakness for Kotak as well. There was SBI too, Axis. These were all stocks which were on the sidelines. Even an ICICI Bank did not do a whole lot, or for that matter, even HDFC Bank. They were in the green, but a little bit tempered at that. BEL, of course, held out very smartly. Bajaj Finserv, Tata Steel, Cipla, Sun Pharma, all those stocks as well did quite okay. In fact, since we're on the subject of IndusInd Bank, let's try and analyze what exactly were the numbers in the con call all about. Because in the con call, the chairman did mention that all issues related to discrepancies are duly identified and addressed. But what's next for IndusInd Bank? Will RBI now take further action? Ankur Mishra, my colleague, is here with that analysis.
Yes, after IndusInd Bank has reported its Q4 earnings, the bigger question remains what happens next to IndusInd Bank. We understand that the bank is going to report the fraud matter to either regulator or investigative agencies because the bank has now found that there was not just process lapse, but a fraud has happened against the bank. There is likely involvement of employees of the bank in it, and the bank has clearly mentioned that it has suspected occurrence of fraud against the bank, not just irregularity. Now the total accounting discrepancy is pegged around 1269 crore in FY25, but more importantly, now it is up to regulator on what action it takes. Sources have informed us that RBI is keeping a close eye on IndusInd Bank regarding the matter, because it is also awaiting what happens to the names of CEOs, which is yet to reach the door of Reserve Bank of India. Remember, the bank has clearly mentioned that it is in process of finalizing its successor, and these names are likely to be sent before 30 June, which is the deadline of finalizing those names. Apart from that, we also know that the oversight committee is what actually running the show under the leadership of Sunil Mehta, and already the global executive firms is in process of finalizing the names, but we understand that it is going to be the outside candidate for the name of CEO of IndusInd Bank. But more importantly, even after the clarification, even after the Q4 earnings conference, there are more questions than answer for the bank.
Very difficult to say. I mean, what's next? All I know is that this is not the time you buy IndusInd Bank. Banks is about trust. Really, I mean, the only one word which describes the banking business is trust. And for IndusInd Bank, I think they've lost the trust. It's not once, it's not twice. It's repetitively where they've come out and guided something, something comes out. Indicate something, something else is delivered. Talk about something, something else in a sense is then reported. It's just been an unfortunate series of events in which what they have done versus where they were versus where they are moving. So I would say just avoid the stock right now. Whoever the new CEO is, and I'm sure there is a board who would take a very strong decision, because everybody knows the importance of a new CEO. Growth has to slow down. The new CEO is not going to come and take up growth higher. So even if and whenever things will normalize, which I'm sure they will, I don't think growth is going to come back in a hurry. So it will be at least 2, 3, 4 quarters before after the appointment of new CEO, markets would say that, okay, let's understand what he's trying to do. The CEO will take 2, 3 quarters to figure out also what is there in the bank, because no financial analyst was able to figure out numbers for the quarter gone by, where instead of 1900 crore of estimated loss, there is a 400 crore additional provisioning which has come with nobody really knows. Now, if you're watching the show, I mean, look, your money is safe in IndusInd Bank. They have enough and more liquidity. What we're trying to understand is what is in for shareholders here, and which I think is very, very different here. Just want to change topics and look at some more names here. Stocks where I can see volume activity as well as value activity. Rudamurthy, is this entire hum and drum in the defense space slightly overdone? Are stocks like HAL, BL, Kochi Shipyard, Mazgaon Shipbuilders, are they slightly overstretched?
See, Nikunj, first a word on Indus India Bank. I would like to give a technical view. First of all, we have to understand lions come generally alone, but cockroaches come together. And why to buy Indus India Bank when you have an HDFC Bank or an ICICI Bank? And also very important, even the new CEO who will come there, as you said very clearly, will take 3-4 quarters. And first of all, who is interested to become the new CEO there? And when people within Indus India Bank are living out, where is the question of a new person who is more interested to come in there and make a revamp? So I am very clear, go to HDFC Bank or ICICI Bank. Don't try to bottom fish and do some great things by buying into these kinds of stock. So whether you call it Yes Bank, you call it Indus India Bank, and many more names similar to this category, I will still go with HDFC Bank or ICICI Bank. Now coming quickly on defense stock, yes, for me HAL and BEL are two definite stocks which you should have in your portfolio. So for me, yes, for very short term, as a trader, if I see the price move in both of them, it has been very steep. So wait for any market correction where, because of fall in Nifty, because of fall in overall market. Yes, when you see correction in these stocks, you have to definitely buy them. So for me, stocks like whether it is BEL, HAL, they're all really good stocks to have in your portfolio. But as a very short-term trader, yes, I will wait for dips to buy. But if you have a larger time frame, even at current market price, I will buy stocks like BEL and HAL. And also look at Indigo results, fabulous. For me, Indigo is a buy at any price. So these are stocks like HAL, Indigo, BEL. You have to buy and hold in your portfolio, and definitely avoid stocks like Indus India Bank.
Okay, a clear avoid coming in for IndusInd right now. But bunch of other stocks which are also going to be in focus. We just flagged off ONGC's numbers. The margins have been inline production, but profit, of course, has been a little bit of a miss. So look out for what that does. You know, the Q4 earnings, they were in line with the consensus estimates and higher exploration costs. So let's see what that stock actually does in trade. And other than that, of course, there are a bunch of others which should be reacting to their numbers. There's, of course, Nalco, wherein the margins have expanded all the way to nearly about 54% versus a comparable of about 31.5%. Revenue also has seen an uptick of about nearly 47%. So that's the other stock which is also going to be in focus. VATech Vabag, the EBITDA has seen a jump up of about almost 22%. Revenue has risen nearly about 24%. So that's going to be the other stock in focus. VRL Logistics also came out with a good set of numbers. Margins at 23%. It's a good 10 percentage point expansion that they've seen on a year-on-year basis. And EBITDA as well has jumped up about 77%. So clearly a blowout set of numbers there. NBCC has bagged a couple of orders from PFC, equating to about almost 161 odd crore rupees. Other than that, there's Hindustan Zinc as well. They've turned out to be a preferred bidder for a 308-acre mineral block. So look out for what that stock as well does. And KEI Industries as well, which has also acquired a huge land parcel in the state of Rajasthan. And it's a consideration amount of nearly about 94 odd crore rupees. That's the other stock which is also going to be in focus. But also all eyes today are going to be on Sun Pharma around the Q4 numbers. It's an all-round growth which we're anticipating, except in the rest of the world business, which excludes India, emerging markets and the US, since of course the base effect is also going to kick in. Varun is here to tell us what his poll is penciling in.
Definitely. So we are expecting good set of numbers from Sun Pharma, wherein the revenues are expected to grow by around 9%. EBITDA is expected to grow by around 19.6%, and we are expecting it to come at around 3,630 crores. Now the company has maintained around 28% margin throughout this year. So we are expecting the margins to increase this quarter as well from 25.3% to 27.7%, although it is not at the 28% level which the company has reported in the last 3 quarters. But yes, on a year-on-year basis, we will see around 240 basis point of increase, and the profit is expected to go up by around 6.6% to 2,830 crores. Now India and the emerging market business, they are expected to perform well, and we are expecting a growth of around 10 to 13%. And the US revenues, if you look, we are expecting the revenues to come at around $485 to $500 million. Now for the rest of the world, yes, on a quarter-on-quarter basis, if you look, the overall growth would be subdued around 15 to 17% decline. Now there was a milestone payment in the previous quarter, I mean the quarter 3, of around $45 million, and that's the reason we are seeing on a year-on-year basis the rest of the world will actually underperform. And also this will impact the overall global specialty business, because the rest of the business will impact the global specialty business, and also there is a sequential decline due to inventory built up. So that's the reason on a year-on-year basis, quarter-on-quarter basis you will see a decline, but on a year-on-year basis they are expected to be good. Keep an eye on the Revlimid sales, what the Sun Pharma would be reporting this quarter in the US, because the Revlimid sales are actually expected to support the overall US business. The R&D spends, they are expected to go up around 80 to 100 basis points on a quarter-on-quarter basis, and that's the reason on a quarter-on-quarter basis the margin is expected to decline to some extent, but on a year-on-year basis it is expected to grow. Keep an eye on some of the products that the company would be launching. On an overall basis, we are expecting good set of numbers from Sun Pharma.
Well, thank you so much, Varun, for getting us all those details. But along with Sun Pharma, FMCG major ITC is also set to report its numbers. The street is penciling in a muted set of earnings. Let's go across to Snehi to get us what more is the street factoring in. Snehi?
Well, absolutely. When you talk about ITC earnings, one can expect a muted set of numbers from ITC for quarter 4, but the numbers, remember, are not exactly comparable on a year-on-year basis, because this time last year the numbers also included the hotels business, and this quarter that number has been, the business has been demerged, the hotels business. So other than that, if you take a look at what the street is penciling in on the revenue front, we're expecting the number to come at 16,980 crores compared to 16,579 crores, which is up 2.4% on a year-on-year basis. But other than this metric, we're expecting a cut for the remaining three. That's EBITDA is expected at 6,018 crores, which is down 2.3%. Net profit is seen at 4,943 crores, which is down 1.5% on a year-on-year basis. Margins are also expected to contract, seen at 35.4% compared to 37.1%. What's going to be the key expectation? It's expected that the cigarette business will largely be steady, and volume growth for the same is expected anywhere between 4-4.5%. So that's what the cigarette business volume growth is expected to look like. 6% sales growth is what we're expecting to see in the cigarette business. But let's talk about the paper segment. Remember, there has been an adjustment here also. They've acquired a major paper player in the quarter gone by. Paper segment will remain weak. Sales growth estimated at just 4.5%. Paper-based PAT to dip due to competition from imports. So the paper business is also going to be important to watch out for. When you talk about their FMCG business, sales are expected to grow at 4%. And overall, if you take a look at their net profit and margins, they're expected to be heavily under pressure on the back of raw material inflation, especially if you take a look at commodities like palm oil, maida, and there's also negative pricing in the notebook segment. So this could be hampering overall profitability. And lastly, if we talk about their agri sales business, agri sales are likely to surge 20% year on year on the back of a soft base that we had seen this time last year. So what's going to be important to watch out when the numbers finally do come out? Demand outlook on rural versus urban, the company commentary on this is going to be important. Competitive intensity, raw material trends, their outlook on their raw material pricing as well, agri business outlook, and the pricing strategy going ahead is all going to be key to watch out for. So all eyes are going to be on ITC, that will be coming out with its numbers later today. But well, yes, a muted set is what we can expect.
Okay, a muted set from ITC is what one is anticipating, and that's what the ED Now poll is penciling in as well. Chakri, just wanted to understand, given the market construct right now and all the dynamics at play, is there anything that you're overweight on currently or recommend buying in this market, or would you say just sit back because you don't know how the global markets are really going to pan out from here? While we've done okay from those, March end lows, but guess this is not it.
No, you're right. In terms of, we've rebounded quite sharply over the last month and a half. With that against the backdrop of earnings not actually being cut in this current quarter. But, we'd still be, overweight financials and industrials, because that's where, there will be tailwinds with an RBI rate cut and eventual uptick in corporate earnings and therefore spends. So I think those are the two areas within that: PSU banks and some of the obvious names in private banks, and within industrials, the EPC companies.
All right, but Chakri, also give us some sense that what are you really penciling in when it comes to the pharma space? Because just yesterday we have seen the pharma index was actually in the pink of health, and of late it did not participate much in the kind of sell-off or rather volatility that we have seen. Do you believe this still offers value and one should look at for a long-term opportunity? Well, of course, with earnings, CDMO as a segment has done very well.
The pharma sector is clearly still wait and watch of the US tariffs. It's the US tariffs is actually, in the case of pharmaceuticals, there's one rate for the branded drugs and one case for the non-branded generics. And the non-branded is where largely India belongs. So there, the tariffs are likely to be much lower. But even assuming that there are a 10% tariff that we have in any case, I think that is largely baked into the numbers. And so if that is the number that it turns out with the trade talks, I think pharma as a sector, companies like Sun, they'll show that 10% types of growth. I think their position and valuations are not heated. So whether it's Sun or Cipla, all these, or Lupin, all these companies are positioned for about like a 15-20% upside.
Right, okay. Chakri, great to have you on the show. Thanks as always for your time. Just counting down to the market open. And we've seen a little bit more of a slip actually, looking at the adjusted implied open so